So here's a question for you. What is profit? And more importantly, why does it matter so much? And then stay with me here, but it matters how we define profit. There's accounting profit and economic profit. Let's talk about which one is superior. So profit is basically what's left over of your revenue after you pay your costs. Now, what is revenue? Revenue, depending on the type of firm you're at, revenue can be thought of for our purposes simply as price times quantity. If you're selling 10 units at $3 each, your revenue would be $30. So let's go with an example here that we'll use for a little bit. Let's say you're making masquerade masks. Miss Lou's masquerade masks, $35 a pop. Get yours now. So if we have $35 per mask and we sell 0 masks, our total revenue will be 0. If we sell 1 mask, we're going to get the $35. If we sell 2 masks, and you get the idea. So this says nothing about our costs. This is just revenue. So you might be thinking, well, what kind of cost does Luz have? Maybe she's got a building lease. Maybe she's got like the cost of goods sold, the ingredients that you're using to make the masks or the inputs. Definitely she's got labor, maybe salespeople. But it's useful for us, for our purposes, to think about and identify explicit versus implicit costs. What does that mean? Well, I'm glad you asked. Explicit costs are probably the costs you're thinking of. The ones we've listed so far are all explicit costs. They are your out-of-pocket expenses. So you write a check or make a payment for your building lease and on your workers, etc. But there are some costs that you don't actually pay upfront for. These are your implied or your implicit costs. And in general, it's the cost of using your resources here rather than somewhere else. And that sounds very abstract. So let's give some examples. So you can think of the idea of opportunity cost. If Luz uses her savings for this entrepreneurship adventure, she's going to be giving up interest income on her savings. If she used to earn $75,000 as an accountant and she instead goes into business making masks, she's giving up a salary. And so economists would like to see that we consider these implicit costs, even if they don't need to show up in earnings reports, etc. They're still important for decision making. They're very important for decision making, in fact. So when economists talk about profit, they also want us to subtract out the implicit costs. Let's give some examples. Let's say you were a lion tamer, and for obvious reasons, you quit that job to open a tanning studio, which is probably also risky. But anyway, you've got $45K a year left over after paying your explicit costs. Are you earning an economic profit? We would say no. We would say you have exactly 0 economic profit. You're earning just enough to cover your costs, including the cost of what you used to be paid, what you're giving up to do this new job. And here's the real reason we care about that for economics. Every decision you make needs to include those implicit costs. For instance, your decision to go to college includes both the out-of-pocket expenses as well as the foregone income you could have been earning if you had a job right away, etc. So accounting profit is your revenue minus your explicit costs, and your economic profit is your revenue minus your explicit costs minus your implicit costs as well. So for that reason, if you have any positive implicit costs, and most firms do, your economic profit will be smaller than your accounting profit. So let's just imagine that your explicit costs are $80, your implicit costs are $20. Your accounting profit will be 105 minus 80, or 25. And your economic profit will be 5. 105 minus 80 minus that extra 20. Should we be sad about this? Not necessarily. Should we be sad about this? No, not at all. It's a smaller profit, but it's more honest. And it's telling us that even after we paid all of our expenses, including what we give up to do this, we still have money left over. So in one sense, you can say we're doing better than we could in that other option. So any positive economic profit is a really good thing. And here's 2 practice questions. You can pause and work on them. And the answer here, this first one is an explicit cost, not an implicit cost. And here's another. Sandy owns a firm with an annual revenue of $1 million. Wages, rent, and other costs are $900,000. Suppose that instead of being an entrepreneur, Sandy could get a job with an annual salary of $250,000. Woo! Assume that a job would be as satisfying to Sandy as being an entrepreneur. Calculate Sandy's economic profit. Go ahead and pause and solve the problem. And your answer is D. By the way, don't be too befuddled that it's a negative. You can have a negative economic profit. Notice the accounting profit will still be positive in this case.